Quick share with the crypto world on Freeview, BTCUSD 30 minutes. This is my take on the proverbial benchmark. It's the one that I keep covering because it's the one that's dictating the asset category. Nothing's really on the majors in that are liquid getting away if Bitcoin isn't getting away. So that's why we cover it so consistently. Take the other longs at your peril if Bitcoin is looking like it could sell off, and then take them at your delight if Bitcoin is looking strong, because the other coins may indeed have the higher beta and give you more upside. So in terms of HVF assessment, there's a lot going on here. You'd need to do a course and a program to understand even the half of it, but essentially what I'm showing is that this is a big zone of resistance. We had an upside here at our relative low too, some big while ago. That's the big structure pattern. That's it over there, and that pumped quite strongly to give you your RH2 up top there, and then we've been in the bear trend all the way down. Also, our structure for our pattern that is currently in play, which is a bearish one, is a stop loss up there and a entry short there, but we took early entries on the break from there. I've been in and out. I haven't stayed resolute, it has to be said, purely because this is a late trend one. I feel that it's probably a late trend one. That means it could have a much higher probability of failing, which means it's always prudent to take off the table regularly and not to be big and make each one count time you enter. Anyway, so this was our entry short. You can see that other funnel area. So these are fat areas for resistance, for return. These would invalidate. This is the pattern invalidation level up at 7.7. This would take back this funnel that we smashed through and then rallied into and have never been above. So this is sitting heavily like a neckline on an inverted head and shoulders, which brings me to discussions that I've had and frustrations that I've had. Let's just see if this is loading. Is it? No, it's not. We'll wait for it to come back up. On reversals. Now, reversals, everybody wants to trade reversals. Everyone wants to be the first. It's far better to get the meat of the trend than try be the first. You actually lose a lot of money trying to call reversals. For example, reversal here, you could even take our stop loss for the upside as close to being a neckline. Left shoulder, head, right shoulder dip, squeeze. Spills to the downside. Not a reversal. Everybody who spots one thinks it's going to be. What about a little earlier? We had a little bit of structure here. This could be a neckline, this red line. If I pulled it a little bit through like that, for example, that would be left shoulder, head, right shoulder. Yay, we broken. Reversal. Target up top there, which I drew but didn't trade. Nope. Squeeze, 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 and bigger spill. So that's two inverted head and shoulders that I've drawn in short succession. Both fail. These are the reasons why I think reversals are overrated and are dangerous, and most people don't know which ones to trade. Reversals are overrated and dangerous, and people don't know which ones to trade. So unsurprisingly, this has all been called a left shoulder. This has all been called a head. And this now is a right shoulder. So this, once again, the same red line at the 6,780 is being put forward as a neckline for reversal. You've seen two fail. Hey, this one might be the one that works. I just warn against trading reversals against a daily trend that is still technically a bear. So if you want to project this forward, I've just shown you two failures. You can go ahead and be my guest. You're going to have to wait for that to break. You'll probably be feigned just in like you were on a couple of them, on one of these wicks, and on the one before. It actually did trigger, and it even triggered with a little bit of impulse there on that neckline, and even went part of the way before it rolled over and died. The key element for me is continuation. This is a rising wedge, and I think we've fallen out of it, and we often get squeezes straight out of rising wedges and very low volatility moments prior to a spill. We got one there when that had a certain amount of squeeze structure in it. That came out. We had a wedge that we'd drawn over. I've removed it now and made it into the flag that it also was. But you had an upside push, and then you had a bit of a grinding line like that and like that. You came out of there, squeezed, went really low vol and spilled. That was one instance. You had it here where these were all wedge structure draws. That was a midpoint of a wedge, and you had it here. And I'm redrawing some past history that I've adapted. Squeezed out, came out, tightened and spilled. So here's two examples of where you spilled to the downside. Hey, eventually something doesn't work. Eventually the reversal does work. But the sensible thing is not to be the guy that keeps saying this time just because you would like it to be that way. Trade with the continuation and avoid trading with the reversals. Most people don't know why and how. They want to call the bottom and they want to be the first and they want to say I was in from there. As long as this macro time frame, let's have a look at it. Let's get onto another chart actually. As long as this macro time frame is reflecting that this is still in a break, you want to bias to caution on any bullishness. Note that all of these price pumps are actually looking very, very small against these pumps and these sell-offs. These are all quite low volatility moments. You've come down here a little bit. This was the last really big candle, and the other big candle was also to a sell. That was the triggering event. Then you rallied after your run of that support and resistance low, which is typical price behavior. That was another selling off event, and you rallied after running that low, which was a typical piece of price behavior. You had all these targets that were made. We called this low on the head and shoulder at the 6,073, and it just traded down to the lows of 6,000, and these setups all with inverteds on the downtrend. Yes, we are in a late bear trend. When I say late, that doesn't mean it can't continue with a stage 2 of selling. If it were to go stage 2 of selling, having performed to its first interim and then rallied afterwards, you could have an ugly capitulation that could take you all the way sub 4K. It can still happen. This still has time, the setup, but the only reason why I'm slightly cautious on it is that it's late in the day. When I say late in the day for forming, is we've had a lot of inverters already perform, and you've already seen $20,000 give up to 6,000. That is a 70% loss in value. You are currently in and around those 70% loss in value, marginally higher than that extremist low there. So you're at about 65% loss in value. So what does happen is you often get chop, churn, a little bit of bullish setups, a little bit of bearish setups, and a lot of people lose money in these markets because everybody is trend changing an era when you're still potentially in the old and you're not strongly yet in the new, and it's what I call a non-binary thing. It's not on or off like a switch. There's this stage that occurs before. That's if the bear is properly over, and bears often reassert with a final twist of the knife that absolutely slays people. So a sudden capitulation here could still be on the cards for many. So I want to caution against those that are all getting very, very keen on the high side. I was hoping to be able to show you a discussion about reversals that I was having with others that love to call reversals both continuation and reversal patterns, and also think that they are awesome to trade. They can be with the help of an HVF and many other reasons with someone who has a great degree of experience, and noting that you need a whole bunch of things in your favor. In fact, if you were to be trading reversals on something like an index, for example, like the US index over the last 10 years since 2009, you would have probably been murdered 11 or 12 times for every marginal one you might have got right. And I would argue on the big time frames, there's been none that have been right. And I can find you many that set up and even got sucked into once or twice calling them myself. It's exceedingly tempting even for old experienced hands. So that's my take on BTC. I think it's precarious. I think it's low volatility. And on balance of probabilities, I will be biasing to the downside. I also think the chance that a second stage reassertion of bear could be on, and this could see a brutal sell-off. If it sells off but not particularly brutal and maybe comes down here and makes a round bottom, then you get arguments for reversals with double bottoms and other things. Could it go up and pump here? Yes, it could. And it could trigger the 6,700 level. And this would be the target if it were to do that, 7779. But for me, that is the minority view. That is the minority view, and it would be the first in at least 3 that I've shown you without even trying of inverted head and shoulders that would then perform to a target. You had one that didn't even trigger, you had one that barely triggered and then formed a squeeze and failed. And we are going probably to form a squeeze over here and go very boring through the weekend, only to possibly have a move Sunday at some point, or maybe Monday with some volatility. That's how I'm feeling it. Unless this accelerates a little bit, it looks like it's going to sleep, and it's a precursor often of this grind line to be broken and potentially more bearish news. As I've already said, it could go up, and I would be wrong on that, and I'm okay with accepting that. Because on the bias, on balance of probabilities, most times the best positioning will be to the predominant daily trend, which for now remains a bear, and you are in a bear setup that so far has plenty time and still could reassert. Okay, that's the crypto sniper, the market sniper, and the reset sniper, and this was your crypto take on Bitcoin. You should plan any other, and this is not advice, but if those that are interested, you should bear Bitcoin's significance as the flag bearer for crypto in account. If she sells off, it will be a tough ask making upside cash in a strong selling Bitcoin environment. If she goes up, of course, then your longs on all the other alts and even some small new ICOs might actually do well. I'll leave you to that of your own accord. So you know my bias and you know how I'm set up. Okay, that's it for now. By the way, webinar next webinar is on 31st of July, BST 1900, and you can check in on how to trade and play best defense and pick up some crucial tips. It's not what you make, it's what you keep that matters. You don't want lots of money to pass into your hands and pass straight out, and how to maintain and build your pot and not do the give back bit. It's crucial for traders once you start getting yourselves into good positions. Okay, we'll see you then, 31st of July, 1700 BST time. I'm Francis, the Crypto Sniper. Enjoy and trade safe. None of this is meant as advice for you. Okay, cheers for now.